A big rate hike of 75 to 100 basis points is planned for this FOMC meeting as the U.S. Fed concentrates on containing the rapidly rising inflation. If you go to Google and type in stock market news, look at this. I think it's important to pay attention to it since it contains all the information you need to understand what is happening. Within such a short period of time, 2 articles, stock market news, a Federal Reserve meeting, a Dow spike of 100 points, equities falling ahead, and we have analysts. Because we are dispersed everywhere, we have news organizations just about everywhere that track the data on their own. And the headlines are there, you know. We are keeping an eye on them when they arrive. And what's remarkable is that, in the 75 to 100 basis point argument, 75 is probably where it will end up. And it's clear from the investor attitude that 86% of investors anticipate 75. This is crucial to notice since, in the event that it is 100, you can only speculate and assume what may transpire. And since this isn't the S&P 500 index, you can only speculate as to what will occur on this chart. And if that occurs, specifically, if there is a 100 basis point increase, and this chart is incorrect, as I claim, then it is evident that we can predict what will happen to Bitcoin. And for that reason, at the end of the day, we completely depend on all of the Fed's actions. All of the basic activities taking on in cryptocurrency at the moment are completely dependent upon what the equities markets are doing. And there are a ton of extremely amazing optimistic developments around the Ethereum merger. There is a lot of bullishness going on right now, and the idea that trillions of dollars are about to enter the markets. Therefore, I think the Cardano Vasile hard fork and the Bitcoin energy discussion are giving Bitcoin some points. And I believe that a lot of people are aware that will occur. Additionally, the total value of the cryptocurrency market is currently trading below $1 trillion. So it's like, we know long-term, the fundamentals are looking pretty fantastic, incredibly solid, and they're really positive, but none of that counts in the short term, as the price of Bitcoin and other cryptocurrencies right now depends entirely on what the Fed does. It is reliant. The U.S. Dollar Currency Index, or DXY, is influenced by the state of the stock market and the equities markets. So therefore, if we were to examine this, we would see that Bitcoin is hovering slightly above the 786 long-term Fibonacci, which is my top highlighted area of concern. If you've been watching my films for a while, you'll be aware of how significant these Fibonacci setback channels are to me. The last bear market bottom to the last bull market high are shown above, and we are now back in that channel. And all I'm looking forward to and waiting for is a surrender below the 786 line. Previous cycles have seen similar events. Also what the Fed is currently doing. And given all of these information, Bitcoin is now prepared for a move like that since we might be in this situation for some time. That is sort of the overall idea made here. We believe a 100 basis point increase would frighten Wall Street because it would suggest that the Federal Open Market Committee is responding excessively to the data rather than adhering to its predetermined course of action. Is Sam Seville? The Fed, headed by Chair Jerome Powell, is anticipated to announce its 5th rate increase of 2022 on Wednesday. According to Chief Investment Strategist at CFR, a second research note would lessen the likelihood of achieving a soft landing and increase the likelihood that the FOMC will ultimately over-tighten. And this is only being discussed as of 2023. Therefore, this is sort of a marathon. This is not a race to escape the bear market. And if there is any kind of anti-hopium feeling out there, I believe that should be the largest thing we all recognize. And this is something I've been kind of noticing, the optimism that we may have reached a bottom, but I simply like to err on the side of caution. I try to prepare for the worst-case scenarios whenever possible, especially during bear markets. Additionally, evidence obtained solely from charts has shown that we may dip considerably lower than the 786 line we just examined. When it comes to getting out of the bear market, this is a marathon, not a sprint, so I prefer to plan for such things and just be cautious. The Fed funds rate is forecasted by investors to rise by 75 basis points for a 3rd time in a row, bringing it to a range of 3% to 3.25. Now, this article continues to discuss the August inflation report, which indicated that headline inflation was 8.3 instead of the expected 8.2. Cooler than July's 8.5, but warmer than 8.1. Look at these numbers, they match this range so well. If we focus on this limited range of 8.3, 8.5, and 8.1, we can see that 8.3 is present. Right, everyone anticipated a 0.1 in the most recent report that was presented. First of all, I believe that everyone is aware that Bosley's popularity is probably greater than any of the figures we are considering. And even if it is falling evenly, it is still higher than what these figures indicate. So there is an 8.3 and 8.1 difference. The main point I want to make is this. It merely demonstrates how highly sensitive this market is by demonstrating how individuals will respond to a spread difference of just 1 or 2 points. Markets are responding negatively to that. It merely demonstrates how empathetic markets are. And when you only have this one, very young technology, crypto, with a market valuation of less than $1 trillion, it reacts to all of these feelings in the regular markets. It will be an exhilarating roller coaster experience. So 8.3, 8.5, 8.1, does it really matter? Yes, it does. Furthermore, I believe it will take some time before markets start to lose interest in these minor variations. Because of how intensely they are currently reacting to these minor distinctions, they are just really reacting. If everyone takes a step back and considers the evidence, we all know it's probably higher, in my opinion. Right? This is a Bitcoin chart, then. Although it currently has a beautiful daily candle as I record the video, this week will likely be somewhat volatile depending on what transpires. The S&P 500 is shown here. You can see that there is currently a green candle on this 6-hour chart. But since the US dollar currency index has recently been stuck to the upward, nobody is really sure what will happen. Right now, as this is taking place, we are witnessing a decline in asset risk. As a result, if this trend continues, Bitcoin will probably continue to decline. So, last night, I was on a Twitter area with a few other experts looking for this to top off. We were discussing this, which is a fairly important topic. One thing I'm noticing, and I believe everyone else is as well, is that while we're putting in these higher highs on this chart and you can just see higher highs on the US dollar currency index, we're getting these lower highs on the RSI. This could be a sign that we're close to topping out because, if you think back to the last time, this chart made a nice run to the upside in 2016, you can see something similar happening now. Even you can kind of see what is occurring. We have this swing high right here before it ultimately fell down, as can be seen if we take a very close look at the daily chart. And as you can see, the RSI, a slower moving momentum indicator, showed a lower high than the swing high, indicating a bearish divergence. That was somewhat of a hint that things might start to cool off. And right now, we've been observing the X, Y, and this bearish divergence. This has been happening to us for a while. So, just as we continue to track Bitcoin, we will also track that. But at the end of the day, everyone, this is just it. I'm simply taking things easy while I wait and see how this week develops. Of course, I'm planning on switching to the 786 for about $17,000. There is no assurance that it will occur, I could be totally off base. However, given that we are currently seeing a bear market and that so much news is being out, I like to simply kind of plan for such outcomes. I receive a ton of comments asking, so you're admitting you don't know, but that isn't the point of my YouTube channel, which isn't to act like this wonderful analyst who can anticipate and tell you what will happen next. And they act as though that is a negative. Like, that's not right. The truth is that nobody in the world, including the greatest analysts you see online, on TV, and everywhere else, knows what will happen. I'm following the journey alongside you all, everyone. Additionally, I am in control of my anticipation and able to make big judgments on my own. That is why I perform technical analysis. You can see from the charts that there is a reason for using technical analysis, despite the fact that no one can predict what will happen next. Waiting for confirmations, whether bullish or bearish, is necessary because they serve as triggers that guide my macro-minded decision-making. Due of this, I engage in technical analysis. We track these things because of this. This green line below is that 786 number. What happens when we break that triggers me to make macro-level judgments regarding my general investment strategy with regard to cryptocurrency. And I base those broad conclusions on charts for Bitcoin rather than any other cryptocurrency or altcoin. It's a lot broader than the crypto markets, so it will be highly volatile, but this is what I'm monitoring as the greater narrative that's happening here right now, everyone. So, this is all I'm watching right now. It will be interesting to see how the FOMC meeting turns out. And the 75 to 100 point improvement. We'll wait and see. Please share your opinions in the section below. As again, I want to thank everyone who is still out there for sticking with me as we navigate this bear market. I'm grateful that you clicked the like button. If you're comfortable outside. And I value your help. In the following video, I'll see you. God's grace.